Okay, we're costing home now for the next segment of the show. Let's bring you up to speed where the market finished up on Monday, starting the final trading week in June, the final trading week in the second quarter of 2016. Banks dumped almost 1 trillion naira worth of treasury bills on the central bank yesterday at a discount window, took the cash out of the central bank, put them in the banking vaults. Illiquidity at the marketplace, interbank average north of 20%, overnight rate 50.7%. Call money around 32%. That's the story to start with on Monday. Naira traded lower slightly against the dollar at the spot market to 282. A parity at the street level, that was around 300 plus. The market started a bit on a negative note. That include the stock market, where we had about 2.63 shave off in the composite index return, bringing year to date to about 4.2%, although still positive. Banks and all stocks took the biggest hits on Monday, including the industrial and consumer goods. At the fixed income window for bills and bonds, it was slightly bullish, not just in Nigeria, but across other jurisdictions in other parts of the world, as investors continue to react to the exit of United Kingdom from the European Union. Yields on many government bonds were positive on Monday. Let's bring in Olawale Olusi, who is a research analyst at Afrinvest, to talk to us. Wale, thank you very much for coming through. Brexit in London, birthing in Lagos. Looks like this is warming around the world. Talk to us about Monday fixed income, sovereign debt story, not just in Nigeria, but around the world.
Wow, good morning, boss. And just like you mentioned, it's really very bad all over the world at the moment. I mean, starting with Brexit and of course to our own domestic liquidity issue. I think for the liquidity in the system, that was largely because of what CBN did with the FX, the new FMDQ, OTC, interbank exchange rate, where we saw the CBN trying to clear up the total amount of pent up demand for FX as at last Monday when the market opened. And of course we saw the CBN do over $500 million for spot markets and about 3 billion naira for the futures OTC, futures market. And then what we saw there was that the banks were actually debited for they were debited in naira, but this liquidity has been squeezed out of the bank. So, that is how we got to where we are at the moment.
Yes, that's how we got to where we are. Wale, if I may cut in very quickly. So, on one hand, the central bank mopped up those cash from the banking system for the FX spot market on Monday. That was last week, Monday. Then yesterday, the banks went to the discount window and said, look, we don't have money. Give us some money. So they took 980, almost 1 trillion into the market. Look at the interbank for us. Look at where rates are right now. Overnight money as high as 32% overnight lending. That's serious overheating right now. So where do you think further money will be coming from? How do you think rates will continue to play out for the rest of the week? It's a very crucial week. We're ending the month. You know about this very well. We're ending the quarter as well. A lot of book balancing will start happening.
Yeah, I think the system is expecting over 140 billion from FARC allocation today. That should ease the system a bit, but we don't think that liquidity will be enough. I think the banks will still have to, to a level depend on the, SDF, the standard lending facility from the CBN to stabilize the system. But I think, if the CBN will not be, paying back the banks in the short run, I'm not sure it's so appropriate for, for you to keep so much liquidity with the bank. Most of the fact that these banks aren't going to be getting anything, from this reserve that you've kept with them. So apart from the FARC allocation that is coming in, I think some TB's maturity maybe in the short run will come in. But I think the liquidity in the system is very, very significant at the moment, so that the system can continue to flow. That's massive for the system. And like you mentioned, the money market rates are all firing higher now at the moment, and it's going to continue to squeeze the system. The banks are gradually becoming much more unattractive I mean, you are squeezing them of liquidity. They are less profitable, and of course, they have to cut down expenses just to, remain attractive at the moment. So, I mean, I think the CBN should look into this again and find a way to ease the system. The CRR is also something to look at. I mean, and that's about 20-something% at the moment. Maybe some liquidity should, be allowed to come back into the system. The states aren't getting enough in terms of FARC allocation, so that alone cannot, be depended upon. And the futures market, the CBN is still the only supply of FX in that market at the moment. So things are still not as stable as we want them to be. So there's a need for a lot of easing for the bank to be able to, do what they are in business to do. That's what we think.
Two quick one. While here, the conditions precedent right now, does it make it attractive for the central bank to do any a PMA, primary market auction, open market operations anytime in the days ahead, in this week on one hand? Then we're looking at July, the next MPC meeting. What easings are you looking at? What are you looking for?
Okay, let me start with the first one you mentioned. I think it's appropriate for the CBN to look at PMA at the moment so that the banks can get some liquidity. They just need to pump in the system. But for July MPC, I think easing is the way out at the moment. I mean, the CRR is quite high. Maybe they should look at that again to create the required liquidity in the system, because I think that's one thing that is required at the moment largely. NPR perhaps, well, we can still keep that the way it is at the moment to see how things stabilize going forward. But I think critical at the moment is liquidity for the banks to be profitable, to give out loan. I mean, the key pressure in the system is being more or less resolved with the policy we've seen in recent time. I mean, the next thing we need to, deal with at the moment is how to, reinflate the economy. Let's allow the inflows of coming from, the federal government, fiscal policy, to also filter into the real sector. Let's allow private sector to start, getting loans from the bank. I mean, let's allow some liquidity to enter in the system so that, the real sector will start, operating. If loans go around and, businesses start getting loans, you can import whatever you want to import, or even if you want to invest domestically, you can do that. Then the system begin to operate. That way we can get the dividend of, what we've done in terms of FX, we've done in terms of the, oil and gas sector, and of course what is coming from fiscal imports. Employment can, come back, and the retrenchment you are seeing in the banking sector can also reduce. I think these are some of the key issues that the MPC should look at.
Okay, Wale, we have more questions for you, but let's leave that to tomorrow. We'd like to find out what you think the half-year numbers will look like for the banks. This is the final trading week. We expect half-year numbers to start from the bank and the results to start from next week. Thank you, Wale. Keep that at the back of your mind, and the rest of your colleagues there at Afrinvest will open that in 24 hours from now. Olawale Olusi, research analyst at Afrinvest, one of the licensed brokerage firm and investment securities trading organization on our marketplace. That's about all for today. I am Boasting Mofai. I'm in today for Harriet. We expect her to be back on the block tomorrow. Do have a great day, and bye for now. News comes first here on Channels Television. Wherever you're watching, stay with Nigeria's news leader.